Here we go, guys. Tuesday, July 6th. We're going to look at this legacy market, stock markets, starting off with the Dow Jones. And we thought, a lot of people calling for, market crash. This thing's going to correct 50%, whatever. So let's take a look at that. Now, we did have it just start back here when we started getting a few cracks in the dam and in the foundation, so to speak. We had this topping tail here, which shows that people are selling, and then that was a big hint that we would possibly be going lower, and then here we go, and then we got back up above the 20, came down, hit our long-term uptrend line that goes back to October of last year, and then got back over the 20 again. But we made a lower high. As you can see, this trend line that comes down, that red line, we had a high, lower high here, actually, lower high, but we got back above it. And here we are today. And actually, this candle was all the way under this down trend line. And if we start closing under that trend line again, and this low pivot where you see the blue dash line, which coincidentally lines up right with our 20, which is beginning to flatten out here. If we close a daily candle like this below all that area, then we'll be back on the bearish side, and then we'll look for if we keep water falling down, we'll look for this low pivot over here to hold us again. Well, first of all, this one, and then this one, and then here we are at 33,000. Let's just call it 33,300 right here. And then if we break that, then we'll probably come down to the 200. So the market always gives us, a hint, an indication, before there's going to be a drop. It just doesn't drop, overnight unless it's a black swan event, a war breaking out, or something crazy happening out of the ordinary. And if we do start rolling over here, like I was saying, we'll first close under this downtrend line, which is really right now a support line. It was resistance. We got above it. What do we do? Come back and retest it. And then it wouldn't surprise me if tomorrow we got a green candle here to the upside, after testing it. But we still have this little consolidation area right here, 1, 2, 3, 4 candles, and the 20 forming that little low pivot there for support. And then, as we come down, if we lose that, you can see we even have this high pivot over here that almost lines up with it right there. But anyway, we'll come right down. I missed that earlier. We have this low pivot over here, and then this one, and then this one here. Okay, so we'll have several, support zones that will hit first before we crash to the bottom. Unless there's some major world crisis or something that happens, and then all bets are off at that point. Okay, let's look at the Dow Jones transports, and it's another indicator. We were in this ascending wedge formation, and most times those are bearish, and they do break down to the downside, as you see here. Then we tried to make it back up, couldn't do that. Made a high, lower high. Let me pull this in so you can actually see something. High, lower high again. Okay, so we do have you can make a trend line down like that. And then this right now, that red dash line is resistance. We hit it, pivoted up, consolidated, wrote it again, came under it. See all these candles that could not close above it, came down a little bit more. And then here we are with the 20, pretty well extended, to the downside here from where we were previously by the when we were closer to the ascending wedge formation. So next support, actually, we'll have to raise it to this little low pivot here where we had red, green, and then we popped to the upside, consolidated. Then here we are. So if we break it, Again, that'll be the next, hey, red flag. This one, first red flag was when we broke out of this uptrend line here. That was support within our wedge, and then our ascending wedge, that is. And then getting under the 20 was another red flag, getting under this low pivot resistance area, and then not being able to get back over it. So, a lot of factors already, a lot of red flags showing weakness. And then the SPX, S&P 500, here we go again. Ascending wedge formation here. Several green days, so we were due for a red day. Matter of fact, we even came down and then it was bought back up. So we will have to see over the next couple of days. We could come back to the 20. It is very healthy for a stock or market to come back to that 20 after it gets overextended either to the upside or even downside. Okay, so it always comes back, riding here. See, we come back. So that's just the nature of how the markets move up and down in waves. Not necessarily ever, even though we did it pretty much here straight up. That's and over here. But it's, kind of rare, and it always trades sideways to down to come back into the 20. So basically, in an up market, bullish market, you buy at or over the 20, okay? Like this, just for example, this candle here. And then you ride it up, and then when it starts getting far away from the 20 is when you start unloading, because sooner or later it's going to come back. Okay, the NASDAQ, again, all time. I mean, now is when really you need to be selling or taking some off the top, at least. If we pull this back, we're in this little ascending wedge pattern again. Matter of fact, we could probably draw another trend line right here. Let me see if I could do that right quick. See where we go. Yeah, like right in here. And we'll see how that ends up. Let me make that blue. And see, we're just right in this price channel. Really, it's just an up price channel. And support will be this consolidation zone. See how we popped up here. 1, 2, 3 candles in a row, consolidating. And then we lifted off last 2 trading periods, okay? So yeah, we could get a nice pullback in the S&P 500. Doesn't mean I'm gonna go ahead and take that off. There's just too many lines here. Yeah, there's just too many. We traded too far above, too many days above the 20. Last time we touched it was back here on June 3rd. So that was an amazing run lately. And then the IYR, kind of a real estate ETF, trading inside bar, inside this green candle here, sideways consolidation. So we'll see if we can pop out of the box, or if we drop like this one, down and out of the box. And then if we do that, then we'll go down this next little high pivot area, and eventually we'll hit that 200. The Qs still running strong. Real strong. So, and see, again, well above the 20. So we're due for a pullback. And then just real quick, the DXY, the dollar, strong, hit this, got over this double top here where the smaller red dash line is. And then right now we're fighting this thicker red dash line as resistance currently. And we'll see. Put in a good day today, close, and this is after hours overnight trading now that's going on in the futures market. And let me take this fib line off, clean this thing up a little bit. So we'll see if we consolidate here or pull back in a little bit, make a higher low. Because see, we had a low pivot here, higher low here, and then we'll see if we can continue up, or if that is a pretty strong resistance zone for us near term. But we'll put this down here, and we could trade in here for a while, and we'll see if we roll over, if this holds support. But right now, as extended it is over the 20 and hitting this resistance area, kind of a very, very near-term double top here. It can't really even be called a double top, but it's, the candles are pretty close together there. We will see if we can pop up and out of there over the next couple of days. And then when the dollar's going, pretty well, then as you can see, gold sells off. Silver, let's see what we did today. Yeah, silver had a bad day, but still above the 200, still in this consolidation zone down here. Let me take this fib line off, clean this thing up. And, we're in this up price channel. The dollar started getting stronger, so here we go. Weaker silver. They seem to be, so far have a line in the sand right here at about 25, 80 or so. And we'll see if that can continue to hold. Copper down a smidge today. So we'll see if we can get back up. Normally, copper is another indicator you can use, kind of an outlier on how well the economy is doing. If copper's doing good, then generally the economy is doing good, and things will keep running. But the SPY, basically ETF for the S&P 500, same trading pattern here, pretty much. So, but okay, guys, hang in there. If you need anything, let us know. And thanks so much. And we will see you on the charts.